What's up, everybody? Welcome back to the YouTube channel. Really my journey. I kind of wanted to start this Sunday off by kind of talking a little bit about what my YouTube channel is about. I don't want anybody to think really that this YouTube channel is for people that are looking to get signals or trade ideas. I want this channel to be more of what my journey is like growing as a um, trader, as a day trader. And I just kind of wanted to share my journey. So in no way I'm sharing any kind of signals, any kind of trades or anything like that. This is simply and solely for the purpose of just recording my trading journey. Um, so let's get right into it. Uh, I kind of wanted to talk about what we were looking at this week. I'm going to start with the replay button here really quick, starting for, let's see, on Monday. Let's see, Friday, Wednesday, Thursday, Monday, right here. So this is where we were at. Let me go ahead and hide all my drawings here. There we go. Awesome. So looking at the market, I preach a lot about how I'm learning price action and what I'm doing to understand where the market is going to go, right? And one of the main things that I really preach about is following the higher time frame and what it's doing. Because what I understand from the couple of past months that I've been learning from ICT is we're always going to be price is always going to deliver to either a relatively equal highs, relatively equal lows, a high or a low. We can even aim for intermediate highs or lows if you're looking to just kind of scalp the market. And or also fair value gaps, which are also known as sell side inefficiencies or buy side inefficiencies, are also known as SIBIs and BISIs. And I'll kind of go into it a little bit deeper moving forward. But for right now, I kind of just want to bring your attention to what the daily market was looking like for Nasdaq. So we see here we were in a super bullish run. We had this BISI, buy side inefficiency, sell side imbalance, right? I think if I remember, that's the correct name for it. If not, I'll go back and correct it. Or if someone wants to comment below, if I'm not saying it correctly, but that is a SIBI or a fair value gap. Sell side imbalance, buy side inefficiency is what it's supposed to be, right? So, and I think here once I show you my drawings, you'll see this area right here marked with that gap. We were looking for price initially to go down and break these equal lows here, and target into this gap, right? And that's exactly what we got from the previous weeks here. This strong bearish trend. But starting the week, we were up here, right? So we wanted to kind of see in what we kind of want to figure out which direction we want to go in. Is this market going to come back down and revisit this gap right here after it's been tapped into this, or do we want to go back lower and then break lower, or do we just want to tap into that and break higher, right? So that's kind of what we want to look at. On the weekly time frame, you notice it's a little bit more obvious. This gap right here, we tapped into that and then we reversed immediately. So let's go back down and see what we got marked up. I'm going to show my drawings here so you guys can see. This was what ICT considers as a 50% price range. Consequent encroachment is, I think, what he calls it. And that was that bearish run that we were expecting, right? Moving forward, we did see a huge rejection out of that once we tapped into this daily volume imbalance. A volume imbalance is where price has a void, right? There was nothing there, right? So how does that help us? Sometimes those are targets. If you look here, it literally tapped and then it just reversed. And we can go a little bit. I have another volume imbalance here, but volume imbalances are very important. I do pay attention to those, and then I'll go. You notice here I have NWOG. That's a new week opening gap. Those are very important as well. Those are things that I like to mark up on my chart just for reference, so we understand moving forward, marking those areas and seeing how they're going to react to those specific prices, right? So let's take a look at the daily here. We started the week off that previous week in a bullish trend, and I still left this volume imbalance. You notice I marked it as a volume imbalance D. That's on the daily time frame. We also had another small volume imbalance right here. I know it's very small. You can barely see it, but it's there, right? Don't pay attention to this yet until we move forward. But right here, we were kind of in uncertainty, right? We didn't know whether the market was going to come back down, revisit these gaps, or were we just going to push higher. And what I have marked here, do we want to take out this high after we have a really strong bullish trend, or do we want to just stop there and then reverse down? So let's take a look at the 1 hour. Let's see here. So Friday we closed up here right underneath this volume imbalance, which was a volume imbalance on, if I'm not mistaken, on the daily, which is this gray bar right here, right? We were just a few points shy from tapping into that. So let's take a look at what it looked like that day and why we took the trades that we took this week. Let's see, Sunday, and we're paying attention down here. If you notice at the bottom, it says Monday. That's going to give us the time. If you guys are new to trading, at the bottom on TradingView, it gives you the date and the time of what we were looking at. So let's go down to a 15-minute chart and let's go to Monday. Where are we at? Monday, right here. And usually I take my trades. I have a specific plan that I like to take or follow. My plan is waiting for 8:30 open to pass first to see if it's going to give us any type of liquidity run, any kind of stops that it's going to want to take. Is it going to revisit some type of fair value gap? Is it going to give us some type of fake out? And you hear a lot of traders talk about, well, the first move is always the fake move, little things like that. So you always want to wait for open. In this case, if you notice down here, I have my time settings to New York, UTC 5. All that means is that I have my time on TradingView set to New York's local time. I currently live in Houston, so our time is, if I'm not mistaken, 1 hour behind from New York. But on TradingView, I like to have it on New York time frame. That way we can follow the news, and we can also follow what price is doing that morning. So let's go and get into the bread and butter of what I wanted to talk to you about today. So this is Friday, and what I have marked here, from Friday to Monday, right? When Friday closes, if you look at the very bottom, you can see it switch from Friday to Sunday, right? From Friday to Sunday, usually there's a gap that opens from when Friday closes to when Sunday opens for the following week, right? This is what I have marked up right here. It's the close and the open. So Sunday, we kind of fell back down underneath the new week opening gap. It kind of bounced around. We didn't see that much movement until here we are. If we look down at the bottom, I wait to see what happens between 8:30 and 9:30, right? So 8:30 we have market open right there, right? I really I want to explain why I took this buy trade, right? Number one, I see this volume imbalance on the daily. Let's go back to the daily. Like I said, I like to do my trend analysis, my top down analysis, which means that I look at the higher time frame first and I go back down. So on the daily, if we look at price, let me go ahead and make this a full screen so you guys can really see what I'm talking about. You see where price is sitting right here, but there's no candle that is filling in this area. And what that's called is a volume imbalance, right? There's an imbalance in price here. There was no way for traders to either get in or out or enter or even participate in the market within this range, right? So it kind of creates like a void, right? Like there's something, it has to return to this area, but it doesn't have to be immediately. One point or another, and sooner or later it's going to come back and want to revisit this area. And that's kind of what I was eyeing, and that's why I had this marked up. So if we go back to the 5-minute time frame that day, right? You see this line right here. Let's go back to Monday. And this is where we were at. So this was our new weekly opening gap. It kind of played around underneath it. If you noticed, price before the open kind of just played around, and it really didn't give us much to work with, right? Not a lot of narrative, nothing like that. Not until here, right? So let's kind of take a look a little bit closer and see what's going on. Let's actually go on the, which is the time frame that I usually take my trades and my entries on. So this was, and you can see it on the 1 minute, that gap right here. It almost creates a volume imbalance. If you take a look at it, there's a void right here, right? So if you look at the bottom, that's Friday's close. This is Sunday's open. It created a gap. So that gap is important to me, right? So if we move forward to Monday that morning, let's take a look here. Yeah, right here. So I want to bring your attention here. We were above the new week opening gap, and this is what caught my interest that moment right here. This specific candle. If you look at the time, 8:27, 8:28, this gap right before the open created what I call a SIBI, which is a sell side inefficiency, buy side imbalance, right? So with that SIBI fair value gap, I see this as a potential entry. We have a break in structure right here. Right there. That's a break in structure. This is a break in structure, the major one. This is the first one that I had marked. But this one solidifies that for me, right? And why does it solidify it for me? Because it's a major, or it's a obvious high that anybody can really look at. This is a high, right? This may be a high, but this one here really looks like it's a pretty strong high that we had. So when I see this candle right here at 8:28 break above this one, not only does it break above, but it closes above, and then we have that second candle come up, close above this high as well. To me, that confirms a market structure shift, right? And so when that happens, especially during this time at 8:30, if you look, we come right back down at 8:31, and it gives us, and it taps into that fair value gap, that SIBI, right? That's the entry right there. And what am I aiming for? So first, I bring my low underneath the NWOG, or the new weekly opening gap. And from here, the entry continues. And what's my target? My target is going to be either one of two things. It's either going to be a high, or it's going to be some sort of fair value gap, or some sort of equal highs, or what some traders may consider resistance, right? So that's my target. And if you look here, immediately at 9:30 during equities open, this single candle brought me all the way to almost pretty close to TP. And then right here, it taps into that volume imbalance, that daily volume imbalance, right? To the tick. If you look at it, look at where it closes the candle, right? It wicks, takes me out of my position. And this is also another entry right here. This is an order block right there. That white candle right there. You see this entry? This could have been a potential second entry just to make sure that we target these highs right here. If you wanted to participate in that, that's also another really good entry where you could have potentially entered and had a very small risk, super small risk for a high reward to target these highs right here, right? But that was my trade on Monday. That one really just took TP and we were in and out of the market and we were done, right? I did have a few analysis after just to see, how price was going to be reacting, and it actually played out. There was an entry right here where it took out some highs. If you notice, it took out this high right here, reversed here. There was distribution here, second stage distribution here, and it created that gap. This gap could have been an entry for a sell. I didn't take it just because I had already hit my target. Your high would have been your stop loss would have been right here at this previous high, and your target could have been anywhere. Where's the lows here? Your target could have been this low right here. And if you look straight across, that's exactly what our NWOG was, right? So you see the importance of the new weekly opening gap could give you, right? You could have entered here. You would have been in a slight drawdown, but it would have never taken you out. And it would have given you over a 2.5 reward. If you look at the risk to reward ratio, 2.5, that's a pretty good ratio. TP would have been smacked and you would have been out of there. I personally didn't take that. This could have been a second entry here as well. I didn't take that, like I said, because I'm only working on just having 1 to 2 trades a day. And this one right here I was done for that. I was done for the day. Let me see if I can go back into Tuesday. And again, I start my analysis from a higher time frame. So now that we can look at Tuesday, we see that this volume imbalance was tapped and WOG also came back down. And you can see where these candles came back into some sort of liquidity grab right here. So these candles came in, took out this sell side liquidity, took this one out. And that's what we're looking at. Where's the draw on liquidity next, right? So once I have a trade that hits TP, I leave it alone. I close my charts. I move on to the next day and then just go from there. I don't pay attention to what happens in the afternoon unless I'm looking at a PM session at like a silver bullet or something like that. And we can get into a little bit more detail in the future about silver bullets. But moving forward, let's take a look at Tuesday. Tuesday was a really crazy day. Kind of caught me by surprise only because initially I was not paying attention. I knew that on a higher time frame we wanted to go higher, right? But I didn't. There was one thing that kind of caused me to take a short and take a loss. So let's take a look. Monday, Tuesday, right here, we had already tapped into this gap in that volume imbalance that we were looking at. Let's take a look at the hourly on Tuesday, right here. Tuesday, I was waiting for this to have some sort of rejection, right? Initially, my overall bias was bullish because I wanted to target this gap. But I saw something that morning that changed my mind. And let me go back and show you what I was looking at. Right here. Tuesday morning, again, outside of my rules, 8 in the morning. I usually don't trade anything until after 8:30 or open. So I was breaking my rules and the markets came back and bit me, really. So I saw this rejection right here. I marked it up. I put it on my Instagram and I said, hey guys, this looks like a solid rejection, right? It tapped into the volume imbalance. We see it close under it. We see the same thing here. But what I didn't realize is we had another rejection come back down. So we broke above it after. So let me go back down to the 5 minutes so you guys can see exactly what I was looking at that day. Right here. So this was my analysis, right? I was looking at this and I said, okay, awesome. We closed right at the volume imbalance and it gave us a bearish candle. Once it got it right into here, I took a sell and I had my TP down here at the sell side liquidity. So my entry was something like this. Short position here. My targets were down here and my stops were right here. Stops are very important. If you pay attention to this, had I not had a stop loss, or I had like an open position with no loss, no limit, this thing could have ran against me and potentially could have liquidated my entire balance, liquidate my entire everything, right? So this shows you why a stop loss is very important, right? And that's a lesson learned. I've blown many accounts because I don't use a stop loss, but moving forward, every position that I take will have a stop loss, because at the end of the day, we're traders and we have to manage our capital, right? We have to conserve our capital. And that's the name of the game. You have to have an edge to know what's happening in the market, watch price print, enter while price is acting, right? Price action is king is what they say. But you also have to conserve your capital. If you can't conserve your capital, you don't have anything to trade with. So make sure that you're always using a stop loss no matter what. Some trades may go against you, but that's going to be your safety net. That is your safety net for you to keep your capital. If it hits your stop loss, I would much rather lose $100 than lose like $5 or $6 or $1,000 because I wanted to be greedy and hold that trade, hoping that that trade was going to reverse and go in my direction. And clearly, this is a really good example of that, right? So we always want to make sure that we have a stop loss. So this was my analysis that morning. I saw the candles close and I took that sell and it went straight into my stop loss. What I didn't realize was that I was trading before the time that I was supposed to be trading. If you look at the time below, 8:45, 8:50, 8:55, we didn't see an entry really until 9:30, which is equities open. We had this massive bearish candle. And if you look here, this is key right here. That right there is a rejection of that volume imbalance, right? This was just a fake out to get traders caught into some sales and get destroyed. Right here, when we had this bearish candle and then I see this rejection right here, that is key. That is what I want to see, because now you have narrative. You see that you have a bullish candle right here. You have a bearish candle that came back, took out these lows, rejected on the volume imbalance, closed right there. It didn't close down here. It didn't close down here. It would have been different if it would have closed right here underneath this low. That would have given me some kind of confirmation to go lower, but it did not do that. Instead, it wicked, caught traders, and that should have been an entry right there. On the 5-minute time frame, my trade should have looked like this. That rejection right there with that bullish candle, long position. As soon as that bullish candle came up, came back down, this was my order block. That should have been my entry right there. Low placed right below that low. And if we really wanted to target, we could have targeted. Let's take a look at where we have another high looking this way, right? Or what are we looking at? Fair value gaps. So if we look here, look at this high right here, and look at this fair value gap. That's what I have marked up. We also have buy side liquidity sitting right up here. And clearly, we've been in an uptrend. So chances are this trade is going to want to shoot up, right? So targets should have been placed to target that volume imbalance or that high sitting right under that volume imbalance. And that would have worked out perfectly right here. You would have caught a 1 to 6.15 win, risk to reward. You could have had another entry here as well. mind you, I enter on the 1 minute time frame, but I also use the 5 minute time frame in correlation with the 1 minute. So this would have been your entry right here. Another fair value gap formed right here. Let me go ahead and mark that up for you guys. Let me delete that one right there. This would have been your second entry. And we're going to talk about pyramid entries in the future, but that's going to be for another YouTube video. This right here, and it's scary to enter on a candle that's going down, but that's why you have systems in place. That's why you put your low underneath that. That's why you put your stop loss underneath the previous low. Your target should have been the same right here for another 1 to 4 win ratio, risk to reward ratio, right? So these were entries that should have been made and paid attention to on Tuesday, but instead we took a loss here, and that was that, right? I did try to take another entry right here because I did think that, hey, you know, once we want to pay attention to consequent encroachments or quarters of gaps. So I saw that we tapped above the 50% of the gap that I had marked. And when I saw this bearish candle, I immediately saw this right here. And I thought that was a perfect entry to come back down and target these entries or these entries as shorts. But again, it came back, went against me, hit my stop loss, and that was the end of that day, right? Again, I'm personally, for my trading journey, I'm only planning on taking 1 to 2 trades per day. Why do I do that? Because I don't want to set myself up for failure. If I've done this before and I've over traded many times and I end up losing more than what I made either that day, the previous day, so on and so forth. So I don't want to go and continue my losing streak. I would rather much give myself another opportunity to conserve my capital and trade another day. So keep that in mind when entering multiple trades a day. You only want to limit yourself to 2 losses at most. Why? Because again, that's going to give you enough leverage, enough capital to be able to trade the next couple of days if you have a losing day. You don't want to have losing days consistently, but if you do, because trades will sometimes go against you and take you out at stop loss, right? That's just part of the market. That's just part of the game, and you're going to have to learn psychology. This has to do a lot with psychology. This is a whole different chapter that we're going to talk about, but that's something that's apart from just your trading plan. That's also part of your psychology plan, right? You don't want to overtrade because it's a dopamine hit. And again, that's just something that we're going to talk about on another YouTube channel. But to keep things very simple for this video, again, my journey is just that. It's 2 trades per day. If I take a loss, I close the markets, move on to the next day, and just wait, right? And the reason, like I said, because I want to conserve my capital and I want to have enough capital to trade another day, right? So let's take a look at Wednesday's trades here. Let me go ahead and open this up for you guys. So this is another way of looking at the market. You want to see where orders are being placed, right? You see that we have a small uptrend, and I'm not a trend line trader, but I like to see trend lines getting destroyed, which is exactly what happened here. I ended up getting in a little early on this trade. I did get stopped out. If I move into the 1 minute, you'll be able to see my analysis. I did take a loss that day, but I also took my win back with my second trade. So let's take a look at it. We were already sitting at a fair value gap area, which is the area that you see marked here in this gray box way back. I think, if I'm not mistaken, from October, I could be wrong, but I think it's October 12th or 13th is when we created that gap that we were in this gray area. So this is 9:30, equities open. That's part of my plan. I did see a bullish run here. And again, our bias was bullish for the week. So I felt pretty comfortable taking this trade. I did see where we could have targeted the top of this fair value gap or the high of that candle that was created from there. We did see, I was looking at market, kind of play around here, play around, and then I entered right here. Why did I enter here? I saw this bearish candle, and then I saw this bullish candle come up, and I saw that retracement right here. This bearish candle right there was my entry, because I saw this gap right here. And let me go ahead and highlight that so you guys don't get confused. Right there. That is what I was looking at, right? This gap. This was my entry. I was hoping to target the top of that fair value gap, but what I didn't realize is that this candle here shouldn't have given me any confirmation, because it's not like, if this really isn't an order block. I don't consider that as an order block, because it's a bullish candle. It's a bullish candle. If it was a bearish candle, that would be considered an order block, but it's not. So that was my mistake right there. Immediately ran up, and then went ahead and destroyed me and took my stop loss right there. This one is a completely different story. There's two things here that kind of give me confirmation. Number one, I can consider that as an order block, or a bearish order block, right? Why do I consider that a bearish order block? One, because we have this bearish flow right here, these strong candles. We have a slight up, close candle, and then immediately distribution. So this could be stage one distribution, retrace, order block, second stage distribution, and then we have this retracement right here. And if you look at it, it comes back in and taps right into that order block. And not only can you consider that as an order block, but you can also consider that as a breaker block. And we'll talk about that in the future as well. Breaker block, or some just mark it as a BB, right? Let me go ahead and mark that as a BB, breaker block. What's a breaker block? A breaker block is when market breaks really strong, comes back, and then continues the trend, right? It breaks, it kind of comes back in, and it slightly just taps or kisses this piece right here, which is also paired with the bearish order block. That's how I see the markets. That's just something that I've learned from ICT. If you have a different way of looking at a breaker block, some people may consider that as resistance. I don't trade support and resistance. That's something that I kind of just wanted to get out of my my vocabulary, and just kind of see the markets here a little bit different. But that's what I was looking at, and that was my entry for that day. So initially we took a loss right here, but once I saw that I was offsides, I saw this happen. Stage one distribution, stage two distribution. There could have been another entry right here for the first stage distribution. This candle could have also been another breaker, but I went ahead and used this one just to be on the safe side. Stop loss right at that high right there, and then target, we were going to target that sell side liquidity. Why was I confident in this trade? Because I noticed that we have all this, which is in quote a trend line, right? And what do retail traders see right here? They see multiple entries. They see this as support, support, support entries. Eventually, this is going to get taken out. There's stop losses sitting right here. Those stop losses have to get taken out, right? And that's just the way the algorithm works, and that's just the way that I've been taught. But this entry right here immediately came back down, and you could see it took out these lows, and target was hit. It did continue down. We could have made more money, but greed is just not in my plan. We like to just hit targets, move on, close the laptops, and wait for the next day, right? So that was my Wednesday trade. Let's go into Thursday. I did take a trade on Thursday. So let's take a look at the 15-minute time frame, just to kind of see where we are with price on the higher time frame. Thursday right here. So we're still sitting at this SIBI. Yes. And I'll go back and correct, because I think I marked these as SIBIs, and they're really BISIs right here. And I'll give you guys an example towards the end. But that is supposed to be actually a BISI. And the way I remember now is BISI is a buy side imbalance, sell side inefficiency, right? BISI, B for buy, SIBI, SIBI for sell. And that's how I remember. I apologize if I got that incorrect at the very beginning of this video, but I wanted to make that note just so I don't confuse you guys. And for those that are fellow ICT traders, forgive me, right? And correct me if I say anything incorrectly. Please comment below. Correct me because again, I'm learning. This is just again, you guys are just following my trading journey. I'm just wanting to share this with you so I can create some kind of journaling within my trading plan. So I appreciate you guys. If if I'm doing something wrong, please correct me. Let's take a look at Thursday. Thursday was a loss. It was kind of hard. I'm not gonna lie, it was a little bit hard to kind of determine where price was gonna go. Again, we were still bullish for the week, but I was trying to scalp some shorts. And let me show you on the 1 minute chart so we can take a look deeper at what we were looking at. Yeah, where are we at? Right here. So this was my trade on Thursday. Thursday, we definitely took a loss. We were still floating inside that SIBI from October 13th and 12th. My entry was here. Again, my trading plan consists of me looking after 8:30 and 9:30 open. So this candle right here specifically was at 9:31, which is equities open, right? So you see it kind of whipsaw the top, take out the highs, come back down, and it created this gap right here. That was my entry right here. This wick was my entry from this gap. So I was if you notice, I put my stop loss at this high. I was targeting the lows right here is what I was targeting. But it immediately went back up and took me out. It wicked me out and then it went back and it hit my target. And after I took that loss, I closed my computer. I did not want to take any more trades or anything like that. I was watching price a little bit just to kind of see how it would react here. But I did not take any more trades simply for the fact that, if I'm going to take a loss, I'm going to minimize my losses. Keep your losses short and make sure that keep your wins big. That's always key. So we did go back and take these lows out. You can see here we went all the way back down to this low. And then we created relatively equal lows. When I see relatively equal lows, to me, that's an indicator that it's going to want to come back and take these lows out, right? For retail traders, they see this as support, right? They're like, man, once it comes back down to this price, I want to go ahead and buy. So their orders are sitting right here as buys, or they're sitting at their stop loss is sitting right here, right? They're thinking that price is going to go to the moon because it acted the way that it did here. But in fact, if we look forward a little bit, it came back up. It made sure that we took the rest of these traders out. We got up high. It wasn't until the afternoon session right here. I think that day, if I'm not mistaken, we had news. Yes, it's going to show 2 p.m. here because it's not New York local time dated, but we had Powell speak, and it's considered obviously a high impact news driver for the markets. So when that happened, we had a massive sell right here. What did it create? What did that create? From here to here, it created, and I'll type it in here, a SIBI, sell side inefficiency, sell side inefficiency, buy side imbalance, right? Why is it that? Sell side, it's inefficient in sell side and it has an buy side imbalance. There's no buy side, right? It didn't give traders enough time to come back in and get any buy or sell. Right? You see what I'm saying? Sell side inefficiency, buy side imbalance. It's inefficient and it's imbalanced. So this could have been a great trade here to target this, right? Perfect trade. But because I had already taken a loss that day, I wasn't interested in being back into the markets. When you trade news just like this, you always want to wait until after news. You notice that this was at 2 p.m. Or 1 p.m. New York local time. If you see here at the very bottom, you're going to want to see here, that candle was at 101, which is when he started speaking. This would have been a great entry to target the lows as a reversal, which would have been it. And if you notice, this is 50%. This is consequent encroachment of this gap. So if you look at that 50, it came right back into 395, and this candle's high is, and you're looking up at this number right here whenever I hover over this candle, it's 396.5. So just a point and a half right above. If you see this consequent encroachment, 395 right there. Right there. That's what we want to look at. That's consequent encroachment. That could have been a potential entry to short the market. Keep your stop loss right above the previous high and then target the next low. So you could have just targeted this low right here and you would have been in and out of the market and been done right there. That would have been a beautiful trade to work with. This could have been another entry. This bearish candle retrace, come back up. Notice that it taps right here. And again, it continues down. What do you want to target? You want to look to see if you can target the lows. So this is another really, like, this sticks out to me right here. So, and if you look at that, that would have been another target to aim for. But like I said, my rules strictly prevent me from over trading. So I didn't take this at all whatsoever. And it's funny how it came back, touched that volume imbalance that we were talking about earlier on the daily. And then Friday, I didn't take any trades. Were they any trade opportunities? There could have been. Matter of fact, let's go ahead and take a look at it. So if we look at the bottom, we could have waited for 930, which would have been this. We were already revisiting all this right here, right? The volume imbalance that we spoke about from the beginning of the video from October 13th. Actually, not October 13th. Let me take a look. That was the high. But this volume imbalance was around October 17th, 16th or so. And if we look forward at that, it came back, repriced itself over here. And then if we zoom in a little bit, even on the 5-minute time frame, which is what we're looking at, you see here how it's respecting that, but that's at 720. So I couldn't have taken that even if it gave me that support because it's not within my trading plan. And what I'm looking at is the time down here whenever I'm highlighting. So you can look at the time, 7:55, 8 a.m. So I'm not looking to take any trades until after 8:30, which is after this candle right here, right? This could have been a perfect entry right here. Even this one right here, right? So I like to focus my time between 9:30 and on. Between 10 and 11, usually there's always some type of entry, which this could have been your entry right here, this order block. If you look here, that's a bearish order block right there. Also paired with a fair value gap, right? This is the fair value gap that it created. You notice that it created a BISI, buy side inefficiency, sell side. If am I saying that correct? Buy side inefficiency, sell side, buy side imbalance, sell side inefficiency. I'll make sure and put that in the video here once we take a look at it. Sometimes I do get mixed up with the acronyms and the words, but I want to make sure that I'm showing you guys again. I'm a student as well, so I'm trying to make sure that I'm sharing this accurately as possible so we can go back and make sure. But this is an order block. This is a BISI fair value gap. You notice that it has a very strong push upside after 930 open. It comes back, retraces, comes back a little bit more, and this should be your entry right here. Long position, that could have been your entry. Remember, stop loss at the previous low right there, which is right here at this candle. And go ahead and delete that so you guys have a clear version of what you're looking at. And you could have targeted this high right here. That could have been target number 1. Or if we look at the higher time frame, we were already aiming. If you see this arrow right here, look at where this is. This is a high that was from October 12th. That's a very obvious high, right? We also have a weekly volume imbalance, and we have a 1 hour SIBI, which is a fair value gap. If we put that into perspective from where we're at in price, we could have targeted either the high right here for a 1 to 6.89, or we could have targeted this fair value gap as soon as it tapped right there, right? And that would have hit take profit right there beautifully. That was a beautiful price delivery right there. Again, I didn't trade Friday because I was already at my threshold of losses. At the moment, I'm not trading any real funds. I am a funded trader. I'm funded with True Forex funds. Actually, there's always two that I get mixed with because there's True Forex funds and my Forex funds, and I don't want to give you guys the wrong funded company that I'm with. I'm checking on my email right now just to make sure. But I think it's my Forex. I keep my live account with Henkel Trade. For those of you that have asked me, I've gotten a few DMs on my Instagram asking, hey, who do you trade with? Who are you funded with? Henkel Trade is my live account provider. And then for my funded, I have True Forex funds. And that's who, like I said, that's who I've been funded with. I've been able to make, payouts and everything like that. If you guys go to my Instagram, you guys can see that on there. But that was my analysis this week. And moving forward, I know this Sunday it's kind of hard to determine. Let me go ahead and clear all this out so you guys can actually take a look at what we're looking at here. I'm gonna delete. I want to clean out all my charts so you guys can actually see everything of what I'm talking about. Because I want to make. I like trading naked charts. I just mark up really just my gaps, my highs, and my lows, and that's pretty much all I trade. We've already traded into this 1 hour from Friday. You can see it tapping into that, and it gave us a beautiful rejection. Let's see where it actually. So if you see here, it already tapped into the high of that gap. But I will be posting another video probably mid this week and kind of see where we can look forward to seeing where price is going to go to this week. If we're being honest, there's only two things that I can really see this week play out. I am anticipating price to go lower and take out possibly these lows. I know that's a really long way to go, but with everything that's going on in the world and on the other side of the planet and here in the United States, it being fourth quarter, things can get pretty crazy. So I would like to see price come back down and then eventually shoot up to attack this gap and this volume imbalance. And once it taps here, then I can see more sells, right? It's uncertain where price may move now from Sunday. But if you want to go to my Instagram, you guys are more than welcome. I usually post daily setups on there of what I'm looking at before I take them. So if you guys want to follow, please feel free to go follow me. My Instagram is Adrian.14NK. I'll post it down below in the comments. So if you guys want to follow, like I said, you guys are more than welcome. And man, I hope you guys are enjoying the videos. I'm gonna try to continue to make at least one video a week every Sunday, just to kind of follow up with everybody. And you guys can follow my journey. I'm just like everybody else, so I'm nothing special. I'm just another individual trying to learn how to maneuver myself in the markets, simply by sharing my analysis with you guys. And that's all I'm here for. So with that being said, I'll see you guys on Monday. Happy trading and be safe.